Hello everyone, welcome to Cryptocurrency Mobile Mining and Trading. I'm Dixon and I'm excited to have you here. After countless hours of research and testing, I'm here to bring you the most reliable real-time updates, insights, and strategies to help you stay ahead in the world of crypto mining and trading. We're going to explore opportunities, learn together, and grow our crypto knowledge and profits, all from our mobile devices. Before we dive in, do me a huge favor. Hit that like button, subscribe to the channel, and smash that notification bell so you never miss an update. Your support means the world and helps us bring you more content just like this. All right, let's get into today's big news. We've got a major development in the crypto infrastructure space that you need to know about. Canadian-listed Republic Technologies Inc., which you'll find on the Canadian Securities Exchange under the ticker symbol DOCT, has just made a huge announcement. They've secured a proposed $100 million secured zero-coupon convertible note facility. Now, that's a mouthful, but here's the kicker. It's backed by collateral in Ethereum, or ETH. This move is all part of their plan to aggressively expand their Ethereum staking and validator operations. So what does this actually mean? Republic Technologies has stated that over 90% of the money raised will be used to purchase ETH. The first slice of this funding, an initial tranche of $10 million, is set to be drawn down soon. Let's break down the key facts so we all understand the mechanics here. Republic has entered into this agreement with an institutional investor for this $100 million facility. It's a 0% interest note, but it comes with a 10% original issue discount. A key detail is how it's secured. The facility uses a fixed number of ETH as collateral, which they're calling the ETH target. This target is calculated as $12 million divided by the ETH to US dollar reference price at the time of closing. The very first drawdown is a $10 million convertible note, and it's expected to close around October 24, 2025. Of course, this is subject to the usual conditions, like getting approval from the Canadian Securities Exchange and finalizing all the custody arrangements for the ETH. As I mentioned, more than 90% of the net proceeds will go directly into acquiring ETH. This ETH will support their validator infrastructure and attestation network. The small remaining portion is allocated to general working capital. Another important aspect is that these convertible notes can be exchanged into common shares of the company. The conversion price will be the closing price of the DOCT share right before the conversion, all subject to the exchange's policies. Now, you might be asking, why does this matter? This is where it gets really interesting for anyone invested in the crypto space. First, this is a massive ETH staking infrastructure build-out. This funding clearly signals Republic's intent to scale up its Ethereum validator operations and its attestation network. This means they are actively participating in the proof-of-stake infrastructure as a service. It's a significant shift away from just holding or trading tokens. They're getting into the nuts and bolts of how the network runs. Second, it's about corporate treasury exposure to crypto assets. By explicitly allocating the vast majority of the funds to buying ETH, Republic is tying its balance sheet and its core operations directly to the Ethereum ecosystem. This could be very appealing to investors who are looking for exposure to crypto infrastructure but want to do it through a regulated equity format, like a publicly traded company. Third, the mechanics of this convertible facility are telling. The fact that a major institutional investor is comfortable with a zero-coupon note facility that's tied to ETH collateral is a huge sign. It shows that big money is becoming more comfortable with crypto asset collateralization and the risks associated with infrastructure. This is a clear indicator of the increasing institutionalization of the entire sector. Finally, let's talk about market positioning. For the company DOCT, this announcement could be a game changer. It helps them reposition themselves from their previous identity, they were formerly known as Beyond Medical Technologies, into a pure-play blockchain and ETH infrastructure operator. This pivot could totally change their investor base, their valuation multiples, and how they compare to others in the sector. If you're finding this breakdown helpful, please take a second to hit that like button and subscribe if you haven't already. And if you have any questions so far, drop them in the comments below. I'll do my best to answer every single one. Now, with great opportunity comes great challenges and considerations. We have to look at the other side of the coin. First and foremost, there's execution risk. Raising $100 million is one thing, but deploying it efficiently into ETH staking and validators involves a ton of operational risks. We're talking about custody of the assets, managing staking rewards, the risk of slashing where you lose ETH for bad validator behavior, maintaining validator uptime, navigating regulatory compliance, and of course dealing with the market volatility of ETH itself. That brings us to the second major risk, ETH price volatility and collateral risk. Since the collateral is denominated in ETH, a sharp drop in the price of Ethereum could reduce the collateral's value. This could trigger certain rights for the investor or even require Republic to top up the collateral with more ETH. Third, there's conversion dilution. If and when these notes are converted into company shares, there's a potential dilution risk for existing shareholders. The specific terms, like the discount rate and any warrants issued, could significantly affect shareholder value. We need to watch those details closely. And fourth, we can't ignore the regulatory environment. Crypto infrastructure companies are facing an ever-evolving regulatory landscape across different countries. Staking operations, validator services, and holding large amounts of crypto on a corporate treasury could all attract regulatory attention. The rules are still being written, and that creates uncertainty. Finally, there's market perception. Will investors believe that Republic can successfully transition into an infrastructure-focused business? Or will they see this model as speculative until the company starts showing real revenue and its validation operations scale up in a meaningful way? The market's judgment will be crucial. So what should we be watching for? Here's your checklist. First, keep an eye out for the closing of that first $10 million drawdown around October 24, 2025. We'll be looking for the official confirmation and all the execution details. Second, we need to see the details of subsequent drawdowns and their conditions. Will they successfully raise the full $100 million, or will it be done in smaller, incremental stages? Third, we'll need to monitor the ETH purchase deployment. How much ETH is being purchased, when is it happening, and what are the custody and validator arrangements? Transparency here will be key. Fourth, we need to track the rollout of their validator operations. We'll be looking for announcements of new validators, any clients they sign up for their attestation network, service contracts, and ultimately, how they start generating revenue. Finally, we need to scrutinize their corporate results and disclosures. Upcoming quarterly and annual filings from Republic will be essential reading. We'll be digging through them to find revenue from staking or attestation services and to see the size of their ETH treasury. Let's get to the bottom line. Republic Technologies' $100 million secured convertible note financing is a landmark development for crypto infrastructure in the public equity markets. By funneling over 90% of the proceeds into ETH acquisition and building out their validator network, the company is making a clear bet on deep protocol involvement, not just surface-level trading. It's a bold move. However, execution is everything. The successful deployment of capital, operational reliability, managing ETH price risk, and navigating the regulatory landscape will ultimately determine whether the market validates this pivot. Both investors and market watchers need to carefully evaluate the massive opportunity here, but also be very aware of the considerable execution risks involved. This is exactly the kind of in-depth analysis we do here, so if you've enjoyed this video, please make sure you're subscribed, you've liked the video, and you've hit that notification bell. It's the best way to support the channel and stay informed. Let me know your thoughts on this deal in the comments. Do you think it's a smart move for Republic? What are your biggest concerns? I'm really curious to hear your take. Thank you so much for watching today. My name is Dixon, and it's been a pleasure breaking this down for you. I'll catch you in the next video with more real-time crypto news and strategies. Until then, stay sharp and trade smart.